A delivery failure is going to happen at some point because of the way this scheme is structured. The amount of synthetic or digital metal that far exceeds the amount of physical metal upon which the system is based.
Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
The independent media is under attack. The Telegraph is reporting that Google is changing its search results to promote what it considers to be reputable news sources and government websites and punish those deemed low quality. Finance and Liberty and many other independent news YouTube channels are experiencing reduced revenue. Finance and Liberty earnings and views from the first quarter of 2017 were down nearly 50% compared to 1 year ago. My goal is to continue running my independent media outlet and create even more quality content. So I've created a Patreon account. If you'd like to become a supporter, simply make a pledge. Once we reach our $2,000 a month goal, I will create an exclusive podcast featuring one of you. Yes, I will be interviewing one Patreon subscriber per month and let them tell their own story of how they woke up to the reality of our fraudulent financial system and the importance of owning sound money. I want to build a community of like-minded individuals. If you can make a monetary pledge to help Finance and Liberty, then awesome. Go to patreon.com/financeandliberty and pledge as little as $1 per month. I understand that not everyone can pay for extra content, and I want to make the community open to everyone. So I will be sending out the special monthly podcasts in the Finance and Liberty free newsletter as well. So if you don't have any funds to pledge, simply go to financeandliberty.com or click here to sign up for the Finance and Liberty newsletter. Hey everyone, this is Elijah Johnson with financeandliberty.com, and with us today is Craig Hemke from TF Metals Report. Craig, thank you so much for joining us today.
Elijah, it's always a pleasure. Thanks for the invitation.
All right. Well, I'd first like to discuss the new jobs report out this Friday. So it was a lot lower than expected. Not as many jobs were created. And there's this question out there, is this just, a reflection that summer's coming and the economy's slowing a little bit? Or is this actually a new trend developing towards an economic downtrend that could last a lot longer than just summer? What are your thoughts?
It was a terrible report, Elijah, on just about every level. Earnings are going nowhere. Jobs are being actually lost. The amount of jobs lost, full-time jobs, far outweighed any growth that you might see in other places. Just top to bottom, it was bad. There were revisions for April. There were downward revisions for March. And it is definitely a part of the trend. Elijah, you and I have spoken a couple times this year about the idea of Trumpflation, or this Trump renewal, this narrative that was shoved down everyone's throats as soon as the stock market got limit down on election night. Because you remember, leading up to the election, everybody said, Trump, if he wins, it'd be terrible. That was the worst thing that could happen. And when Trump won on election night, suddenly the stock market was limit down, at least the futures were, and everybody was in a panic. And then magically it all reversed and headed higher. And as soon as the next morning, it was decided that no, this is great that Trump won. Oh, this is awesome. Interest rates are going to go higher. Inflation's going to pick up. There's going to be all this infrastructure spending and tax reform and all this jazz. We called it at TF Metals Report the generally accepted narrative of 2017. And we've been saying since January that was going to fail, that there'd be an acceptance of its failure as we move through the year. People would realize the dollar's not going up. In fact, the dollar now is down, 7 or 8% year to date. Interest rates are not going up. Long-term interest rates are all falling year to date. About the only thing that's hanging in there so far is the Fed's beloved stock market, but that may be getting to stumble a little bit here as well. So, yeah, it was a lousy report this morning. It definitely calls into question what the Fed might do here in a couple of weeks. what the Fed's true motives are as well. And it sets up a very interesting month of June, no doubt about that.
Definitely. And I was wanting to discuss what the Fed is going to do now. It's expected that they're going to raise interest rates again. Do you still see that happening now that we have this bad economic report?
Isn't that funny, Elijah? I mean, we are told, these Fed, Mother and all of her goons, they're all these just benevolent, altruistic, all-knowing, omniscient, masters of the universe that are, they're just simply out there trying to help us all create these wonderful economic conditions. And I mean, it's all BS. It's all garbage, man. Their first obligation is to their banks, the banks that own the Fed, period, end of story. So Mother's got it up her skirt that she wants to hike rates. And again, why? Why now? I mean, the economy is no better. In fact, you could argue it's worse than it's been in a couple of years. And yet all through 2009 through 2015, there were no rate hikes. So why now? I mean, it's not, you can't make the argument that the economy is soaring. What did it grow in the first quarter? 1%? And that's all due mainly to healthcare spending. And now you look at the jobs report, there's no inflation anywhere to be seen. So why is it that the Fed is now hell-bent on raising rates? That would be the question that people should ask, but no one wants to ask that question. You're not going to get that question asked on Bloomberg or CNBC, where they parade sell-side analysts and bank people and money managers all day long. You get instead just this kind of non-virtuous cycle, self-repeating circle jerk where they all just talk about how great things are all day long in an attempt to keep the stock market up, keep the fees flowing. So we'll see what Mother does. I mean, that meeting is coming up week after next on whatever that is, the 13th and 14th of June. I think that's what the days are. Maybe it's the 12th and 13th. I can't remember. Anyway, it's a week after next. Everybody still thinks they're going to hike. And again, my question is why? What is so interesting, so dynamic about 2017 that suddenly there have to be 3 rate hikes in 6 months? Hopefully somebody will ask that question at some point, but I doubt we're gonna get it answered.
Now, moving from the Federal Reserve to the government and Congress, what is your perspective on the debt ceiling? This viewer is wanting to know, there has been a lot of talk about kicking the can down the road with the debt ceiling. Why will it be different in August? Why can't they just make another agreement of some kind? And just a clarification here, as we've talked about before, it's not really called the debt ceiling anymore, but why won't Congress just be able to, extend their borrowing and spending limits again in August?
Yeah, of course they will. Next question. No, I mean, that the idea that suddenly that we've reached the end of the road and they're not going to extend the debt ceiling. And again, just to clarify, because you started to do that so that people know, because I think the vast majority of people fail to understand this. Well, the vast majority of people don't even know there's a debt ceiling in the first place. But when that was put into place, it was an actual ceiling, a dollar amount, that the borrowing authority of the government would stop at, $5 trillion of debt or $10 trillion of debt. And every time we got to that level, it had to be extended. It had to be voted on in Congress. Okay, we'll raise it another trillion. Well, the problem is every time the numbers are now so large and it's all growing so fast on a numerical basis because the numbers are so large, that they were having to raise a debt ceiling like every 6 months, and the average citizen was starting to catch on. Well, wait a second, time out, just a minute. You just raised it $800 billion 6 months ago, and now you're raising it again. What the hell's going on there? So the politicians decided, this is kind of a threat to our power and our chances of getting reelected. So therefore, they changed the debt ceiling to just simply a date in time. So now the date ceiling is, we don't have borrowing authority past April the 30th, or whatever. So now we need to extend it to September the 30th. Well, that's a lot easier to stomach for the average dope that's out there, not paying attention than a hard number ceiling. And so anyway, will the borrowing authority be pushed to another date in the future? Of course it will. That's just a non-deal.
All right, now I'd like to move our focus to precious metals, and I have some viewers' questions on the topic of precious metals. This viewer is wanting to know about the COMEX. It's been talked about before how there might be this, surge in physical delivery orders on the COMEX and that the COMEX would have to default. But this viewer is wanting to know, can't they just settle in cash? And if they did just settle in cash, it wouldn't be a technical default, but it would pretty much be a default. How would that impact the markets?
Well, they settle in cash as it is. That's a possibility for any bank that's short a contract. If they can get the person that's long looking for delivery to take cash or get them to take GLD shares, they can do that as well. I would suggest that this whole notion of a delivery failure is, that's not what, on the COMEX, that's not what's going to start the final breakdown of this paper derivative pricing scheme. If you look closely at the delivery notices each month, and I follow it every month, whether it's silver deliveries or gold deliveries, all it is it's just bank proprietary desk primarily, kind of in a big circle jerk, just swapping contracts back and forth. One month, HSBC will issue contracts and Scotia will stop them. And then the next month, Scotia will issue them and HSBC will stop them, all creating this illusion of delivery, but it's mainly just bank to bank. So unless everyone's expecting some bank to suddenly stand for delivery and thus break the COMEX, and it's just not going to happen. And there are position limits in place that only apply to regular people. Like, so for example, in silver, there's a 1,500 contract position limit. So it's not like, pick your rich guy. Jeff Bezos is going to show up and take delivery of 20,000 contracts of COMEX silver and break the COMEX. The position limit for an individual or a fund or anybody else like that is 1,500 contracts. So unless you get a whole bunch of people to kind of collude and get that done, obviously it's just not going to happen. A delivery failure is going to happen at some point because of the way this scheme is structured. The amount of synthetic or digital metal that far exceeds the amount of physical metal upon which the system is based. Think of it as a big game of musical chairs, all these beneficial owners for the same single ounce. And as long as people play along in this confidence game that, anytime I want my metal, I can show up and get it. Anytime I want to show up at UBS or Scotia, anytime I want to stop by the Perth Mint, or anytime I want to deliver my COMEX contract, or anytime I want to cash out my shares of whatever fund, as long as this confidence scheme reigns that, I can always get my metal whenever I want it, then the pricing scheme continues. What's going to happen one day, though, is there will be a failure in the confidence scheme, kind of like a bank run, where somebody shows up and says, I'd like my gold now, and they're told, well, let's sign this form, and we'll get it to you in 180 days. And then, wait a second, time out. I want my gold. It says here, I have gold here at UBS, and I want it now. No, you can't have it now. We don't have what? You don't have it. That's how the scheme will end when people finally lose confidence in the system. I just don't think that loss of confidence will emanate from the COMEX.
This next viewer is wanting to know, Thomson Reuters was responsible for governance and oversight of the LBMA silver price. Since withdrawing their services, is this vacancy allowing for even more lack of transparency and malfeasance in the interim?
No doubt about it. And we're continuing to see that. These events where the fix is set, off by a couple of percentage points of where the price is trading at the time of the fix. These events are happening with greater and greater frequency. You could still make a case, given this current antiquated system that we still use, that a fix is necessary, in that, with price trading for almost 24 hours a day, at the wholesale level, what price do you use, right? That's what the fix is all about, to get a common reference point for a wholesale activity for jewelers and industrial users and stuff like that. But the process is clearly, broken in London. And so it'll be interesting to see where it heads next. Some of these new exchanges, whether they're in Hong Kong, Shanghai, wherever, they seem to be moving us in that direction. But for now, the antiquated London fix, which has been around for 100 years or whatever it is, still holds sway over the physical market.
Now, the follow-up question to that is, what will it take to make this fix obsolete and go away?
Well, I think in the end, it's going to be a truly physical market with, let's call it conduits all across the planet in different time zones. Why should a metal user in, pick your Asian country, China, India, wherever, why should they transact large wholesale physical silver or gold orders at a price determined half a world away 12 hours ago? I mean, it doesn't make any sense. So what will ultimately replace it in the 21st century is maybe a series of physically based markets located, around the world across time zones, so that your basis, a price that you use for trading and acquiring physical silver in, I don't know, you name it, Jakarta, Indonesia, is a price that was quoted maybe in Singapore or Hong Kong, rather than a price that was quoted in London, hours and hours ago. That's the direction that we're headed, but that infrastructure isn't there yet. And again, the price is still determined off the trading of these derivative contracts, which are just freely created by the banks and have no connection to any physical reality at all. And so, we have got a ways to go before that system is ready, but eventually that's the direction that the world will head.
All right. Well, before we let you go, I was wondering if we can just maybe get an update from you on the precious metal markets and where you see them heading in the near future. It seemed we were talking before the interview how we're seeing gold rise again and silver also, and you're thinking that gold could retest its high of this year. Can you expand a little bit on this?
Yeah, it gets back to this idea that we discussed a little bit earlier about this generally accepted narrative of 2017. And again, part of that narrative was that, the strong dollar and higher interest rates were going to mean lower metals prices, just as at the end of 2015, at the end of last year, there are all kinds of purported analysts out there counting their waves and all that other jazz, talking about gold going to 800 and whatever. We have contended at TFMR all along that the acceptance of the failure of the narrative will take time, and we're continuing to see it play out with things like this employment report today. And so as that narrative fails and as people begin to understand that, there is no Trumpflation, there is no tax cuts, there is no, all you get is just more of the same. In fact, maybe even worse as to what we've seen over the last 7 or 8 years. And that actually, instead of rate hikes, we might be looking at more QE by the end of the year. As all of that takes hold, as that understanding takes hold over the next, what do we have left in the year, 7 months, I've expected all year that the highest prices for gold and silver in 2017 will come in the fourth quarter. Last year was during the second quarter. And even though we started off this year a lot like we did last year, I tried to caution everyone at my side. I said, this is going to be a lot of 3 steps forward and 2 steps back this year. And that's where we're headed. It would be logical. You look at the chart now, there's been a breakout on a recent kind of almost a cup and handle formation on the gold chart, indicating we are probably at least going back to 1,300, probably maybe to make some marginal new highs for the year, like above the highs from early April. Then we may give some back again, who knows. But I do think that eventually prices will trade higher this year than they did last year. And if I'm right about this failing narrative, we're probably set up then to extend those gains into 2018 as well, regardless of the pricing structure, regardless of whether we continue, with this paper derivative scheme that we that we still deal with. So everything's unfolding according to plan, at least as we planned for this year at TF Metals Report.
All right. Well, Craig Hemke, thank you so much for joining us today. Before we let you go, did you want to share with the viewers where they can find you and any last thoughts you'd like to add?
Pretty simple, tfmetalsreport.com. And I just always emphasize that, I guess there's some value to what I do in keeping track of price on a daily basis. And I think people use that knowledge that we share with, to kind of time their physical purchases and save some cash whenever they're buying gold or silver. But the real value on the side is the people that populate it and the opinions they share and the links that they share and the information and analysis they share. So I really encourage people, if you're out there trying to see your way through it and you realize that the world's not what everybody says it is and what the bankers are telling you it is, and you're looking for some like-minded folks to help see you through all of this, tfmetalsreport.com is a place to stop by. I think most folks will find it a pretty good place. So thank you, Elijah.
Thank you so much, Craig.
This video was brought to you in part by ReluctantPreppers.com, helping you be aware and prepared. Click here to watch one of Reluctant Prepper's latest interviews.